Southern California homeowners, what is going on in the real estate market? Stay tuned to find out. And if you're thinking about selling, stay until the end to hear my tip on how to maximize profit in this market. So first, let's talk about the macro. The S&P 500 is down more than 20% year to date. Crypto is down more than 50% year to date. Investors are exiting their positions from risk-on assets like crypto and Bitcoin and moving their investments into real estate. We've all seen the headlines of the hedge funds buying entire residential neighborhoods because they see that as a better investment than any stock options right now. Real estate is a great hedge against inflation, and it's one of the reasons that a recession usually does not equal a housing crash. Now let's talk about the real estate market. Inflation is at 8.6% year over year, and that is devastating for mortgage lenders. So think about it. If you were to lend your money to somebody at 3%, but inflation is at 8%, even after collecting your interest, your money is being devalued at 5% per year. So you're actually losing money on that loan. That's a simple reason why mortgage lenders have had to raise their rates at the fastest rate in recorded history of mortgage interest rates in America. They're losing money on the loans they make, so they have to charge more to compensate and go back above inflation. Here's the concerning part about mortgage interest rates going up as quickly as they have. When a mortgage interest rate goes up by 1%, housing affordability goes down by 9%. So to put that in perspective, we had interest rates at about 3% in December, January, and they're now above 6%. That equates to almost a 30% drop in affordability. To put that 28% impact on affordability into perspective, I'm gonna tell you a story about a buyer. He was looking for a home in December, January, and he was pre-approved with his lender for $1.2 million. He didn't buy. Now, 6 months later, it's June, and his lender revoked his pre-approval letter for $1.2 million because he can't afford $1.2 anymore. The lender gave him a new pre-approval letter for only $915,000. Here's the big problem that we're seeing in the real estate market causing the slowdown right now. That buyer is now forced to shop for a max purchase price of $915,000. So he's sacrificing a lot of the luxuries and the square footage and the neighborhood quality that he could have had at $1.2 million just 6 months ago. The problem beyond that is that he's kind of getting the worst of both worlds, because as he's having to sacrifice the luxuries of the $1.2 million home, he's still paying a $1.2 million payment just because mortgage interest rates went up. So when I hear people say in the industry that home prices will not fall, I just have to disagree with them because of this. A lot of the buyers like this man who could have bought for 1.2 and now can only buy for 915, he's faced with his option to take an inferior home but still have that high payment. He's just gonna choose to sit on the sidelines for a while and not buy. And even if he did decide to stay in the market and buy at 915, he's still having his budget slashed. So the $1.2 million seller lost a buyer that they had 6 months ago. So here's the bottom line. Mortgage interest rates are now in the high 5s and low 6s. They're not going any lower until inflation gets under control. What this means for the market is that last year, and even up until January, when I was receiving about 20 offers on my listings, I'm now receiving about 2 to 3 offers. There are a lot of buyers that simply do not qualify for a home anymore because of the rate hike. And even if they do still qualify for a home, they don't have the stomach to go from shopping for their dream home at 1.2 to only being able to look in the $900,000 range now. And that's true for every price point. That's also true for the buyer at $550,000 in December that now only gets to look at $425,000 today. It's just devastating for them mentally, so they have to sit on the sidelines, hoping that they'll have a better buying opportunity later. The average days on market for a listing has gone up already. Inventory levels have gone up already. Prices have already come down about 5%. The good news is that prices probably won't come down as much as you think. Keep in mind, 80% of homeowners have an interest rate below 3.75%. because they took advantage of the refi opportunities in the last 2 years. More so, only 3% of homeowners are in their home with zero equity. So a lot of the homeowners have even paid off homes or homes that are more than 50% paid off. So we're not going to see a rush of sellers trying to get ahead of their negative equity like we saw in 2007 and 2008. Also, unlike 2008, rents are now higher than average mortgage payments for current homeowners. So it doesn't make sense for homeowners to sell and go rent because, again, unlike 2008, people were selling so that they could rent a home for less per month so that they could save money on their monthly expenses. And that's not the case in this current market. So what does it mean for you as a seller if you're thinking about selling your home? Well, last year, I was giving advice to sellers that it didn't make sense to improve and upgrade your home before listing it for sale because there were so few homes on the market that even the ugly, cluttered, original condition, outdated, fixer-upper homes were still selling for top dollar because buyers had no other option. Now, inventory levels being higher, buyers have choices. They have multiple homes to choose from when they go to look. So I'm recommending that my sellers make strategic, cost-effective improvements to their home so that they can maximize profit and get the attention of the buyers so that the buyers choose your home over the others that are for sale in the neighborhood. Now, advice to my buyer clients. It's finally time where you can be a little bit more picky while you're searching for a home. A lot of the other buyers in the market are facing the sticker shock of their new lower pre-approval, and they're sitting on the sidelines, which means you as a buyer are competing with less buyers. You've got more choices of inventory and fewer buyers to compete with. So buyers, you can be a little bit more picky and find the home that checks more boxes for you and your family. Guys, I'm following the market deeply and closely every single day, so feel free to call me for updates or if you want to have a strategy session or a real estate consultation. Link below to schedule that call. Sellers, I'm deeply committed to getting you top dollar for your home. I'd love to have a strategy session with you to talk about pricing, upgrades, timeline, strategy,